Today, the US dollar has dropped below 105.50 points. During the previous trading session, it lost 0.3%. A week ago, the US dollar tested almost a 2-month high. That's why its retreat could hardly be explained by only macroeconomic data. There is no doubt that the Fed Reserve will be cautious about the key rate cut. Such an approach is in contrast with the ones chosen by other global central banks that have already started lowering their key rates or intend to do this in the near future. Nevertheless, the greenback has dropped against most major currencies this week. If the Bank of Japan intervenes in the market once again, the US dollar will drop even against the Japanese yen. This week, macroeconomic reports will be overshadowed by political events. On Thursday, Joe Biden and Donald Trump will face off in the first presidential debate. On a Sunday, France will vote in the first round of a snap parliamentary election called by President Emmanuel Macron. Now let us find out what reports will attract traders' attention on a Tuesday and Wednesday. You're watching Traders Calendar. The inflation rate is the primary problem for all regulators. That's why it's marked as one of the most important figures in the macroeconomic calendar. Consumer prices are the main indicator of economic health. At the start of the trading week, Australia will release its consumer price index data. According to the forecast, it will rise to 3.8% from a 3.6%. And this is the highest level since last November. What's more, inflation remains outside the target range of 2 and 3% set by the Reserve Bank of Australia. High inflation rates boost the Australian dollar. On the same day, Germany will publish a report on the consumer climate. This indicator shows the Germans' readiness to make purchases, including durable goods. Lower inflation rates, combined with a significant wage growth, are enhancing consumer purchasing power. And this indicator is currently negative in Germany, but analysts predict a 0.6% increase, which should positively affect the euro. On Thursday, June 27, traders will also focus on the consumers. Japan will release its retail sales data. After decades of unique economic policies involving negative interest rates, Japan's yen has significantly weakened. This led to a drop in household incomes. Last month's retail sales growth was welcomed by policymakers, higher compared to 4 and 5% rates in other central banks. Japan's 0.1% looks meager. The yen continues to fall. The new retail sales report is expected to show a decline to 1.8% from a 2.4%. This will negatively affect the yen, which may slide even deeper against the greenback. Later during the US session, the dollar might strike hard. The United States will release data on two important macroeconomic indicators, namely durable goods orders and the GDP. Despite expectations of a 0.8% drop, durable goods orders rose in April, marking the third consecutive monthly increase. On a yearly basis, the index is likely to increase to 0.1% from a 0%. Although the rise will be very small, the US dollar will still have a reason to gain in value. However, the GDP data released afterward might hinder the dollar's rise. The forecasts are nearly half the previous values, at 1.3% and 3.4% respectively. This indicates that the US economy is cooling amid high rates. The Fed Reserve might need to consider lowering rates sooner. However, this will signal a decline in the greenback. We will monitor the market reaction to the above-mentioned reports, subscribe to our channel, and follow changes in market sentiment with us. Any comments, questions, and offers are welcomed. We wish you profitable trading and see you soon.